U.S. economy does appear to be slowing, and we started to see numbers to show us this even before tariffs were, in the last couple of weeks when tariffs were spoken about. And on top of a slowing economy now in the U.S., if you get the tariffs, perhaps the slowdown happens even further and maybe forces the hand of the Federal Reserve, and perhaps that's what the president wants lower interest rates, and maybe tariffs on top of a slowing economy will get him just that. That's been one of the theories that has been, I guess, talked about out there today. Perhaps this is all to get the Fed to lower interest rates. I think it would be a pretty big, you have a lot of things at stake by doing it this way, but perhaps that's what the president wants. Our first chart here talks about the Atlanta Fed and their forecasts. And you can see their forecasts used to be a lot higher, but their forecast, GDP forecast for the first quarter, they're actually showing a negative 2.8%. That's the first time I've seen that, a negative number, in a long time. Just the quarter before, we actually saw a number in the 2 to 3% range by the Atlanta Fed. Now, take that with a grain of salt. The Atlanta Fed is by no means, right all the time. There definitely will be some variation, but I think the direction is the more important thing. The fact that the Atlanta Fed is actually taking their direction into a negative direction, a negative number, and that just goes along with a slowing economy in the U.S. Our next few charts show, again, other areas of the U.S. that are slowing. Retail sales, advanced monthly sales. You can see in January, another negative number, negative 0.9%. First time we've seen negative number for retail sales, again, in a long time. And if you look at what December was revised 0.7% positive. So retail sales are down, and that's disappointing. Next chart shows GDP in the U.S. GDP, again, coming down. And again, if you look at what the Atlanta Fed said, perhaps coming down a lot more for the first quarter of 2025. So you have GDP down, you have retail sales falling, housing in the U.S., although we did see some better numbers today because mortgage rates have come down because of what's going on with respect to tariffs. But up until recently, housing was softening as well. I have a chart here on it looks like on inflation. We can show that. It is showing where inflation sits, PCE, personal consumptions and expenditures, coming at around 2.5%. It's been about that for a little while now. So nothing that, in terms of a slowdown in the economy is weighing on inflation. You would think that inflation, would come down even further if the U.S. economy is slowing, but we're not really seeing that. What we are seeing is a lot of uncertainty and how that's playing out with respect to a slowing economy. We have a chart, another little illustration, probably my favorite for this show, showing small business and their activity. The uncertainty has been rising, and with that, we're seeing that capex or spending plans coming down on small business. We're seeing consumer expectations, the consumer board coming down again with University of Michigan, which talks about consumer sentiment, how confident consumers are. Overall, investment sentiment in the bottom left corner is not good, is coming down, whereas economic policy and uncertainty have been rising. So I guess, the point is pretty clear. As uncertainty starts to creep up with respect to many things, such as tariffs, such as interest rates, inflation, we're seeing spending, business activity come down. And as I said, we're already seeing activity in the U.S. slowing down. And unfortunately for the U.S. and many, obviously everyone living in the U.S. and even Canadians, as tariffs remain on Canada and all the business that Canada does with the U.S., the uncertainty will only stay high, and it will definitely affect growth in the U.S. and obviously here in our country, Canada, for the foreseeable future.